4 years after the 2022 boom ended, the first real signs of a floor are allegedly showing. Sales are ticking up, inventory's tightening, completions are collapsing, but economists are a little gun shy after multiple false starts. I mean, we saw that like little bull trap on the way down 2023. So nobody really wants to say the B word, because that it is a swear word, man. You say that and people just start ripping you in the comments, but nobody wants to talk about the bottom out loud yet.
Yeah, there you go. In Real Estate Investor Podcast, we've got a news episode. Today. Breaking news in some cases. Just going to run through about 10 different articles as to what's happening, what's important right now. This one is from the Financial Post. Basically goes over that sales are up, or kind of even from 7% from the March low. Months of inventory fell from 4.7 to 4.2, tightening a bit of the resale market. Ontario new listings down 5.5% year over year. Active listings down 5.1%. Single family completions, Dan. This one is a hot topic. Remember the old single family home back in the good old days? They aren't building those anymore. Completions in Ontario at the lowest since 1990 from the research of our good friends over at CMHC. Prices 20% off the peak of 2022. And BMO, Robert Kavchik, and a friend of the show and a reoccurring guest, absorbed several major market shocks the market has, and several false recovery attempts. Slow, bumpy, and gradual. It's not really the words you want describing the Canadian economy, is it?
I mean, we've had Rob on the show a couple of times. I feel like, he called what would happen pretty well. And I think there have been a lot of wrenches thrown in, the perceived scenario for recovery. Like, there are all of the factors that will eventually get us there, but there's also a lot of other factors that we had never anticipated. Tons of big industries being moved to the U.S., jobs. We'll talk about the jobs later in the episode because the jobs report was actually quite positive. GDP report was quite positive for May, which is the most recent data we have. Like, would give you Q2 annualized at like 3.4%, which is ripping. Doesn't feel like that though for the average person, and the average person is the buyer of a house, and so that doesn't really matter what the data says. This is why everybody says that they don't trust the data that comes out of whenever I post a positive piece of data, I'm a CBC propagandist apparently, and then whenever it's negative, they like the data. So I don't know. Anyway, the question here is like, is this the real floor, or are we on false start number 4? That was my Dr. Seuss for the day. I mean, you go through, sales to new listings ratio, months of inventory math. We cover the Canadian Real Estate Association stats. Like, they're trending slightly positively, but it's summer data. Like, what would actually confirm a bottom versus a dead cat bounce? To me, it's like several consecutive months of price growth non-seasonally, right? Like, we saw prices increase from January, February, April, May. I'm like, don't even know what order the months go in anymore. That happens every year, right? And then it comes down again. That's just seasonality.
Yeah.
And then I think also year over year price growth is what's really gonna seal the deal on it being a recovery. But I don't it feels like we're pretty far away from that right now.
But stuck and just kind of again like settling into this new baseline here. I mean, the supply and demand isn't there. There's far too much in. Oh yes, Dan, thank you for pulling up stats.realist.ca, where you have unlimited amounts of information and statistics. Stats.realist.ca. Go check that out. Big chart guy. If you like charts, this is a home for you. But yeah, look, I mean the bottom, the B word, those aren't called publicly. There's no timestamp on that. Are you the person that calls it wrong like time and time and time again until it finally happens and you can say I told you so? Like, single family homes aren't being completed. We're seeing massive purpose-built rental being built. If it feels like we're still in a recession end of vibe session, right? Things are off. So look, that's a great article from the Financial Post there. Dan, we got a lot to get through. Let's keep going here. This one's a bit more interesting. This is where your jobs come into play, right? So this is from the Mortgage Professionals of Canada, and it's about the Canadian housing outlook varying differently, wildly differently, region by region and by property type. I mean, obvious statement, but we know that. Of course, there's no single Canadian housing market. We've said it time and time again. So recovery and just activity in general is uneven province to province, and within a market, the quality and location of whatever asset you're buying, of course, determine what it's going to be. So I mean, some stuff's getting multiple offers and selling over asking, whereas a lot of other stuff isn't.
Yeah. Yeah, and the labor side is all over the map. Like a lot of the jobs were added in Ontario. And I do take a lot of this with a grain of salt, like for
Yeah, you have to.
It is a survey. It's often revised, and people. It's so funny. Everyone's like, "Oh yeah, like obviously May and June data or July data is good. It's all summer seasonal hiring." It's like, well, people hire for seasonal, like in construction and stuff, in May, not July. We're looking at July data now. Unemployment rate hit a 2-year low. Like if your claim was that all of these jobs were created for FIFA, I would say, yeah, like that's actually probably a credible reason why this was likely an outsized jobs report. But to say, LFS, the labor force survey, how we measure this is always seasonally adjusted. But it is interesting to see, like Ontario has been one of the biggest losers in jobs so far. And to see them coming out on top as one of the biggest areas for growth surprised me quite a bit. So we had the labor market adding, I guess, 75,000 jobs last month. A lot of private sector, actually public sector employment. I'll see if I can pull up the chart. Ben Rabity put up a really good chart on this. Public sector employment is falling on a year-over-year basis for the first time since the year 2000.
I saw
that. Like 26 years. So,
bravo.
I mean,
good.
I agree. Like this is not something that I expected, by the way, like at all. But I'm not going to complain about it by any means. Canadian Real Estate Association downgraded their forecast. We have fixed mortgage rates jumping from high threes, I think 3.75, 3.79 to like low fours.
Bonds are not great either. Yeah.
Yeah. Well, and this is the thing with unemployment, right? Like unemployment is, the like us adding jobs slows the likelihood of us getting a rate cut, right? So the bond market's pricing in economic strength, which means that rates don't need to come down to stimulate the economy. National Bank's Sarah Albert said that really good product and really great, good area seems to be doing well, multiple offers, and then, weak product isn't doing well in the housing market right now. And we are seeing, and we mentioned this, I think we did a whole episode on it, first-time homebuyers starting to re-enter the market as well.
The good old 4-year-olds coming out to play and buy their first home.
Yeah, exactly. Yeah. So,
yeah,
a lot of interesting factors in playing in the Canadian real estate space right now. I mean, I think that like there are markets that I would say probably are not going to go down. There are several other markets that I think certainly will go down or will continue going down. So it is it's like, you hear of like a stock pickers market where you really need to know your product and like what you're buying. I think we're in that, but like geography, product type.
Geopolitics is not doing the mortgage market any favors either, right? You got rates going up, you got bonds going up. This hurts projects in real time, right? So that rate cut tailwind that a lot of people were hoping for, and some of the big banks were even predicting, we've covered this on the show, starts to shift, and that affects your psychology. That that impacts when you lock your rate in. If you're doing a larger project, it can hurt, right? So I mean, look, strong job market, seemingly, even manipulated to be stronger, still looks to be positive. That's great, but the market is still a little bit stuck. And we'll see if the labor market, if this trend continues, maybe it can pull the housing market up a little bit, right? Dan, what's that acronym again? Home?
Yeah, housing orders. What is it?
Hope.
Housing, or you got me super
hope,
confused.
sorry.
You said
Hope.
home. I'm like, what's that? Housing orders, profits, employment. So we're at the employment phase, or we were when we were losing jobs, but we're not.
Yeah.
Like you have jobs that are pretty strong, but the sales forecasts are cut. So again, your economic data isn't really being reflective of your economic reality, and jobs can be very easily affected by other things. Like your unemployment rate is a function of how many people are in the labor force as well. If we have all of these temporary foreign workers leaving, which we've heard about, that could easily skew that they're workers, right? Temporary foreign workers leaving. So if they're workers, they're members of the labor force. If they leave, then that skews your unemployment rate up without any change in jobs. We did add jobs, but I'm just saying like it is possible for them to read high. There is another factor. I think I mentioned this on my episode with Simon on the Canadian Investor podcast, the weekly macro call that we do, where basically your StatCan. This is kind of funny. So StatCan basically said, do you remember when we talked about like the immigration minister wanted the Department of the CBSA or whatever it is, like Border Security Agency, to start tracking exits of permanent residents. This was a couple of years ago, earlier this year. But they've started this program. Like they always had the data, they just weren't using it. So they said like, and Ben Tao put out a report from CIBC Economics. I'll pull it up when I get a chance on YouTube, but that, there's his estimate is like 160,000. We're 160,000 people higher than we think this year, 250,000 next year or something, 260, and then 260 the year after, and 110 the final year. So that would skew your unemployment rate up quite a bit if we're suddenly adding a bunch of people to the population that we thought were gone. Anyway, so there's a lot of factors here, and it's all of this to say it's becoming very, very difficult to use these data points, and I understand why people aren't trustworthy of the data points.
It's
so then what data points can we use? That I think one thing that's becoming very clear is Canadians are going more freaking bankrupt, man. And I want to do a whole episode on this because I want to do insolvencies, consumer, business, like what sectors, but then also I want to go through like a top 5 like most famous Canadian real estate insolvencies, like because we had one of the most legendary insolvencies in the world.
That is good. I like that.
Yeah,
a little true crime almost.
Yeah, so give me the sort of like key facts on this. That's kind of your counter narrative to the bottom, which is in Canadian insolvencies are climbing faster. I think at the '08 financial crisis levels. I'll pull it up on stats.realist.ca here for those of you who watch, or just go play around with the charts yourself. I did add this data set to the stats.realist.ca page.
Yes, this is from the Office of the Superintendent of Bankruptcy. This is not
that job
good
sounds
stuff.
Miserable.
Yeah.
Superintendent
Ebenezer
of Bankruptcies.
Scrooge, that's Scrooge. 13,000 insolvencies filed in June alone. That's crazy. Up 11.5% year over year, 7% month over month. And again, nearing the global financial crisis levels in 2009. Remember, let's caveat that by saying Canada did not go bust back then, okay? The States did. We had a very, and we've covered this several times in the show, but just a reminder, we're not saying that things are about to completely blow up, but that was not a great time, okay? It wasn't great, and this is not a great time either. So
yeah, it's not a good comp.
It's not a good comp.
Like,
exactly.
It's not like that. Exactly. If you're comparing yourself to the 90s or 2008,
that's
it's
good.
Like, no, it's not. Yeah.
This is another sad piece here, Dan. And again, who knows, we can trust this data, but let's just say it anyways here. The majority of these consumers are, the majority of these insolvencies are consumers, not as many businesses. So this is the average person, right? High household debt and stagnating purchase power. That's a bad combination, So the household balance sheet is kind of cracking for a lot of Canadians right now. You have high debt. You keep on paying your debt because all your prices have gone up for everything and your income's flat. It's directly relevant, of course, to, again, all of the underwriting that we're doing for any deal that comes across our desk. You have to look at the renter's ability to pay. You've got to look at increased vacancy. You've got to look at maybe lowering rents. I just rented one of my spots. I had to lower the rent $150. It's happening. It's real.
Yeah. No, 100%. I mean, this is like the financial stress. Like we talk about the K-shaped recovery, and didn't the guy in the U.S., was it Besant, who said that he's like, the K-shaped recovery is over. Like, stop talking about it. It's like the stop trying to make a fetch happen thing.
Great reference.
Like when I look at the chart, I think, it's interesting because like consumer bankruptcies are actually down. Like they've kind of flatlined at a low level. And this to me is kind of like, a bankruptcy is a very sophisticated way to go broke, right? You start to see, more of these consumer proposals, and so your consumer bankruptcies are low. Consumer insolvency filings, which is sort of what's replaced it, you can see. Like, so there's kind of newer, less violent, less business oriented paths that involve courts less. You kind of just go negotiate with the lenders. And when we do the full episode on this, we'll explain the kind of difference between the three. But your insolvency filings and consumer proposals are up. Insolvencies hitting kind of '08 levels. Consumer proposals are at all-time highs. So this would really be a lot more of your like your lower middle class, right? People who are going to a consumer proposal because they have multiple credit cards that they're maybe delinquent on, or auto loan or whatever. It's less of that kind of, and this would tell me that there probably is a bit of a K-shaped recovery happening in Canada. And I think this is interesting for real estate investors because we buy assets because we want to be on the top line of the K-shaped recovery. But in many cases, we sell the service of housing to people who are probably, as indicated by the data, on the bottom line of the K-shaped recovery. So you have to pay attention to what's happening between different income categories and classes in Canada if you want to be good at your job of being a real estate investor in this country. I think. I don't know. Any thoughts?
I completely agree. I think that's well said. I think it's interesting as well. If usually the signs of not so great a market comes with the classic government make work projects here, right, Dan? Yeah. I mean, this kind of leads us to our next story here from Stories, friend of the show. $2.7 billion from the feds in a feds and Toronto rental deal. Ottawa and Toronto put a combined $2.7 billion over 3 years. We'll see if that gets done 3 years. That is bold. 18 projects, 50
houses yet. Well, I mean, they're probably this is a lot of those converting your when I called the bailout originally, I was like, it's such an easy policy stroke. Yeah, they're going to get a lot of pushback for it, but they can instantly say, hey, we created 3,000 houses or whatever, 30,000 houses. Yeah, because their houses are already there and they would have been doing nothing otherwise. Like, they're not wrong about that.
Yeah, I mean, look, this is the biggest coordinated Fed city housing push yet that we've seen in a very, very long time, possibly ever, at least possibly since the MERB program and remnants of that kind of stuff. But I mean, we'll see what happens. This is big. Dan, run me through some of the key facts here. We'll do a full episode on this as it starts to unfold and we get a bit more information on what's actually going to be happening here. But run me through some of the stuff that they're talking about.
Yeah, so $2.7 billion over 3 years, 18 projects, 5,600 homes, affordable, supportive, rent geared to income, and rent controlled units. 4,500 homes to break ground by the end of 2026. So there are projects, so they could be getting into a lot of these distressed projects that are in the pipeline. And when they say this, a lot of it is like through a variety of different funding mechanisms. ACLP is a big one where you can borrow directly from CMHC. They might even claim a lot of the CMHC MLI Select in these because these are all programs that have been grouped into the Build Canada Homes initiative. And I mean, realistically, if you're a 95 LTV, they own the home a lot more than you do as an investor. So I think it's a somewhat reasonable thing to say. And they're taking probably more risk than you as well. The non-market stuff, which is your Build Canada Homes, which is actually the stuff that they're planning to create, is $310 million federal, $530 million from the city, and 99-year tax exemptions for the builders and 1,900 units on city land. So the city's vending in the land. The Fed and the city are going to collaborate on building. I guess that's how the city got there. Pencil. Yeah, exactly. I guess well, I mean, they'll figure out a way to make them not realistically.
No taxes, free land. You still can't make it work.
Yeah, wow. I mean, they'll just end up paying 3x as much as they should on construction costs
on the
as is tradition.
Yeah. Well, tell me about the jobs upgrade about this, which is obviously great. That's where the make work. We're in a recession,
Yeah. Yeah, and I thought that was interesting too because there was a chart that I put up on X about, there was institutional building permits. I got to find it, but anyway, it's basically like building permit data from CMHC just came out, or from StatCan just came out, and it's like we're hitting like pretty high numbers, but a lot of it's institutional. And so the government is spending all of this money to create jobs. This project they're saying is 2,100 jobs a year, 2,100 jobs a year. I guess it would only be on a project basis. So eventually, like those aren't permanent jobs. And then you also have the GST that's being removed on new homes. So they're expecting. I mean, this is exactly what we forecasted would happen. Nobody in the industry agreed with me that they would do this, by the way. Like, so this is like the call that I can say was exclusively mine. I didn't borrow it from anybody else. Everybody said that this would be a horrible thing, but and I don't disagree. Like, I don't think we should bail out any sector, but I still knew that I know how policymakers move, and I assumed that they would do this. They're using this and other institutional and government projects to stimulate the construction sector. So that's where we're at right now. And if you look at, let me just pull up that one chart I mentioned here, value of industrial building permits, industrial, commercial, and institutional components. So basically everything other than institutional has flatlined, and your institutional building permits are just absolutely ripping, like hockey stick graph. Wow. And this is like hospital. These are all things that we need, right? Hospitals, subways.
Yeah, hell
like,
yeah.
Yeah, I mean, those are things that add value
stuff.
to your... Yeah.
Build that train from Montreal. Let's go.
That's like, no, that's like the one... No, don't do that.
That's never... Okay, well, speaking of things that are unfortunately happening, I wanted to include this one, Danny. This is from like an expert op-ed, so like a contributor to stories here. I just found this one interesting. It's Ontario taxes housing like a vice, not a necessity. It's kind of a polarizing but very relatable opinion here, Dan. Talk me through what the author is thinking here.
Yeah, so I mean, like, remember when we had
author, friend of the show, by the way.
Yeah, Richard Lyle from ResCon. I'm actually speaking at their conference in September. But yeah, remember when we had Matt on when he was doing the Monopoly thing, like what was it called, like where it was like you can't win. I think was there.
Collect $200, yeah.
And he was basically, his argument was like, stop taxing housing like alcohol and cigarettes. Like, why are we taxing? You put taxes on alcohol and cigarettes because you don't want people to do them, right? And Richard Lyle's argument before was 36% of a new home price, right? So housing is literally taxed like vices in Canada. Now this has changed obviously quite a bit as a result of HST being removed, but that's limited. That's only a year, right? And the development charge policy. So are we going to go after a year? We're going to reset and go back to. I actually don't think. I think policymakers will see that the outcome of this was really positive, and there'll be some permanent changes. I don't know if we'll go all the way back, but I think that they'll say, hey, in the process of removing taxes to stimulate economic activity and make housing more affordable, we realized that removing taxes stimulates the economy and makes housing more affordable. So that would be my hope.
Don't lie. He is, this argument's kind of based in data. And this is very open and known data, right? Taxes and government charges, as you said, 36% of a new home's price here in Ontario. I mean, that's crazy. Go buy a pack of darts. Like,
seriously,
that's cheaper.
Build a house out of darts, maybe. I don't think it would meet fire code, but
housing starts across 50 municipalities here, down 31%. Like, what are we doing? Toronto starts down 47%, sales down 69%, condo starts down 16% versus the 2021 data to last year's data. 55% of GTA residents would consider leaving for cheaper cities. Dan, how many of your friends have left? I know a ton of people that have either moved abroad or across the country, whether it be East Coast, Prairies, BC. I mean, BC, you're not getting lifestyle, I guess, but still expensive. But yeah, everywhere else it's cheaper. And then fewer than half Ontarians 18 to 38. Massive generation span right there. Think home ownership is achievable. Okay? Fewer than half. So, yeah. Look, it's not good, right? That 36%, and again, Dan, you're right, that has been manipulated a little bit, and it is coming down, but like, the damage has been done for such a long time. It's, it's almost like poison the well, like a little bit of like, the mentality around buying it. It's been so hard for so long after being so easy for a little bit of time, right? Like, looking back generations wise, it's like, of course everyone bought a house, and now it just seems so out of reach for more than half 18 to 38-year-olds. Sad. Yeah,
it is sad. I don't think this is going in a positive direction. Like, especially if we catch a bottom, like if policymakers really do pull out all the stops and they try and get everybody, like all the taxes, get all the buyers back into the market, give them rebates, and you start stimulating demand. Like, we're always playing with the demand curve. Prices, people capitalize on these things. You're seeing it in the pre-con space. I think single family home sales in Ontario are up for pre-construction up 160%. Now it's from a low base, and I was on CBC the other day talking about that, but it's still not like, it's still happening. People are doing it. That means more demand means, well, prices often go up when that takes place. So I don't know if I see that trending in a positive direction. And I would say actually this is a good segue to the next article, which is Skyline's Jason Castellan talking about we have to keep building, right? Like there's a lot. We need to continue thinking about the supply side, even though it feels like things are it's so easy to just rest on your laurels and feel like, oh, we made some progress. It's like, well, we really just are less bad, right? We're not good yet.
Yeah. So for those of you who don't know, Skyline is a kind of fairly, I'd say,
they're
major.
Guelph guys, eh?
Yeah, they are, man.
Yeah, they were involved in a lot of our stuff at the Real Estate and Housing Students Association. So
yeah, in the Guelph,
guys,
Kitchener-Waterloo, Cambridge area, really great guys. Actually, Josh, the managing partner, and my business partner over at Build Financial, they had him on their podcast. So I think shout out to Jason. We'd love to have you on. I think he might be a listener if he would grace us with like that. But
somebody who's listening will send it to him.
He goes building, and this is really interesting, Dean, because we've had chats with like really good developers, and they all say this, and then there's the ones that kind of more fly by night, or the too Icarus themselves, too close to the sun too quickly. A lot of different reasons that this stuff falls apart. But Jason Castellan, Skyline Group, says, look, starts are slowing, but backing off now is a mistake, aka cutting projects, cutting workforce, all that kind of stuff. He says that immigration, being the kind of the driving force, likely is going to come back, and the pipeline is going to take 3 to 4 years to build this stuff, right? I mean, if something happens positive in the next, let's say, year or two, and then you try to kickstart the engine, you're likely waiting 3-4 years from then. So he's saying let's build through the slowdown, which I know sounds counterintuitive to a lot of people, but every good developer I've spoken to says you strip back what you can, but you have to keep the trades going, you have to keep the company going. You get you underwrite harder, and maybe you're even taking a loss on these projects for a little bit. But this is what happens in recessions, right? Big companies or strategically well-run companies such as Skyline can figure out ways to do this because their books were good going into it. What do you think, Dan?
Yeah, I would say like at a certain point, it's we know that your population growth is going to resume. Like policymakers have made this very clear, right? And I mean, like,
and happening differently as well.
Yeah,
and okay, so let's the next article.
No, it's okay.
Is about this. So this is why this is a really interesting piece that we're going to get to.
Yeah. So I won't go too deep into it, but like the reality is, our birth rate is at record lows. Canadians are choosing not to have children for whatever reason. We've explored many of the reasons that it could be. They can't afford it. Maybe there's just cultural changes, and we've decided
household size,
whatever. Yeah, like lots of stuff. But I think housing being the biggest portion of Canadians' income is probably a major part of it. And there was a guy, there's a PhD student at University of Toronto, Ben Couillard. I did an interview with him actually for my YouTube channel. He did a full study on this called Build Baby Build, and it was an impact of population growth on birth rates, house prices on birth rates. And so unless we miraculously get our birth rate up to over 2.2 to be the replacement rate, which I just don't see happening anytime soon, you have a population that is falling. Like we have more deaths than births, or you have, like natural population growth isn't high. Yeah. And you could end up like Japan or Italy or whatever and say, okay, we're going to go through this period of great deflation and we don't really care. We're not going to, and we've seen what happens in Japan. You have 1 million vacant homes, and a lot of people would say, oh, this is a dream. Like that's a dream outcome for Canada. But you also have in Japan, like, economic stagnation, right? Like they have a lot of companies that are humming along, but they're not really growing on an economic basis. Italy, same thing. Like you don't really think about Italy and think economic growth, right? So our policymakers, because of the way that capitalism is structured, it always needs more people and more money to consume things so that the economy can grow, consume things and do the jobs so the economy can grow. And we have arrived at this being the best tool that they have to grow our economy in that way. So I would agree with what he's saying that and again, chart 17 in budget shows you can see as um, 1 year population is going to be falling, or 1 or 2 years, and then it's going to start climbing again.
I mean, look, that brings us to the next point here. Canada's recruitment is specifically looking for top minds, talented people. This to me is great news, right? This is good stuff. This is the question that I think a lot of Canadians have asked for a very long time. Why, if Canada's such a great place to live, why aren't the best people in the world coming here? And that seems to be the case that there is a big push for now, but they can't keep them. Dan, what's this? Tell me about this next article from the Toronto Star.
Yeah, so it says Canada recruits top minds, but they can't keep them. And this has been a big theme that we've heard people talk about in Canada on kind of like the bear case for, for our country. Like it's like we train some of the best tech talent in the world, and they go to Silicon Valley. Why? Because they can make more money there. Like our wages aren't exceptionally good, and it's like five high schools in Markham really that feed into this this program at Waterloo. A lot of these individuals are, but even people who were immigrating from other countries. There was that leaky bucket report. I think we did a whole episode or a partial episode
Yeah.
on.
Yep.
Even our top talent that comes here from other countries, it's more marketable. They can get better income in other places because the U.S. is just willing to pay more for their labor, and so they use Canada as a pathway. They get PR here, and it becomes easier for them to migrate to the U.S. or go there on I think it's an E2 visa or whatever. So, I mean, this is a thing. There's data on it, and this is an issue for Canada's economy, I would say, and a lot of it isn't just wages; it's cost of living, right? Housing costs are big. I mean, you can't really make that comparison maybe with Silicon Valley, but I could go move to like the Midwest, make more money, and live in like a house that I paid 50 grand for in America. I mean, not actually, but like,
Or
that's a
or
hyperbole.
like a
But
$1 million home that would be like a $5 million home here, right? I mean, yeah, like the main things that they cite here are immigration friction, cost of living, housing. Those are the three things, right? I mean, people would go through the immigration friction if like cost of living and housing were a bit more achievable here, at least in some of the more major markets. I mean, some of the key facts from this article is that uh, recruitments are facing immigration obstacles getting into the country, right? So it went from seemingly being so easy to now being more difficult for the top talent because we're heavily trying to recruit what we're calling the global elite, researchers, academics, skilled trades, just you know come on in, please. We need you. But then once they're here, even if they get here, the high cost of living, the housing makes it hard to stay. So it's tough, and it doesn't help the supply demand story.
yeah, I would say the issue here is like, the demand piece is you if you're trying to recruit world class talent, they come here, they are like, oh, I got a great job in Canada. I'm feeling like I'm on top of the world. And then what happens? Well, they can't afford to live here, right? So housing policy is very, very important when it comes to economic policy and trying to recruit people.
Yeah, completely. I mean, and this ties to kind of the Skyline article and Jason's point about immigration, and this also ties to insolvencies, right? Immigration is still, and I think maybe forever will be, at least the slow demand lever that everyone continues to bet on in Canada because we have room to grow here if done correctly with infrastructure and controlled immigration. But affordability has been kind of the leak in that leaky bucket, right? The major leak in that leaky bucket that we talked about, Dan, where you see, Canada's top 1%, major Canadian businesses and brands being owned by non-Canadians, like fully, companies in Brazil, companies in China, companies in the United States. Yeah, the bucket's leaking still.
Yeah. And I mean, like, again, we're seeing jobs, trade war, et cetera. I think there's some big like issues on the employment side because if you move here, like there was a article that like a large percentage of businesses were considering moving to the U.S. If they go there, then I mean they're taking their jobs. Like if an individual moves and an entrepreneur, that means they're starting a business in another country and it's pulling economic growth away from us. So it's tough,
Well,
man.
like how many of your friends? I mean, you and I are lucky enough to by nature of who we are and what we've spent our kind of adult lives doing. We're lucky enough to have a lot of friends that are business owners, entrepreneurs, high net worth individuals. How many of them? I know how many of my friends that are in that position complain, but how many of your friends complain, or if you make $1 million, or if you make 500,000, or you're making millions of dollars, tens of millions of dollars a year, the taxes, the red tape, the seemingly constant battle. Whereas you look south and it's like open for business.
Yeah.
Are you getting a lot of that in your kind of like friend group?
Yeah. Yeah. Like, I mean, I hear a lot of people talk about wanting to move to the US. And so I think that this is a significant headwind and it's usually like the most capable people. Like I would say that for your middle class, it's actually easier to be like statistically, it's easier to have positive economic outcomes or achieve upward mobility in Canada than the US. So and like that's why we have strong welfare systems. There's a whole bunch of factors that um, have led us to this being the case here. But in the U.S., if you're a really high achiever, the upside is way less limited. Like in Canada, you're from even just from a tax perspective, and I think we've talked about this a bit on the episode. Like you pay a low, like we have one of the best tax policies for small businesses in the world. But then as soon as you become a big business, right? As soon as you cross a certain income threshold, then you get taxed way higher. So you're disincentivized to actually get to from small to big business.
Exactly. Exactly. So I mean, it's tough. It's tough out there. And on that note, there's been, I think Moneris was just sold, right? So that's another big Canadian company. And then this is another interesting article that I thought I'd throw in here, Dan. H&R REIT, $6.7 billion breakup. This is from the Financial Post and Bloomberg. One of Canada's biggest REITs, that's real estate investment trust. You invest in these things and get a dividend, and they invest in apartment buildings on your behalf. So if you want to be a totally passive landlord, it's just about the only way to do it. They are being carved up and delisted. And here's the interesting piece. I mean, massive portfolio, obviously, but no single buyer wanted the whole thing. So Blackstone, yes, Blackstone, the world's largest asset manager, number one alternative asset manager, as it boasts on their website. The Public Sector Pension Investment Board, which is a Canadian Crown Corp, and Crestpoint, and a new U.S. residential REIT all split it by asset class. So, that's interesting. It's interesting to see. I mean, but walk me through some of the key points you see there, Dan, and maybe what this a big real estate transaction and kind of carving up of a portfolio and divide it up into different asset classes and different owners. What does that mean for the general real estate market? Should anyone outside of the big wigs doing this stuff be concerned, or does this have a ripple effect, or what does this signal to the market, I guess?
I don't know if I would call it like a concern. I just think it's interesting that foreign, like, and we, to segue from U.S. and people being compelled to move to the U.S., like foreign capital from the U.S. is interested in Canadian real estate and bullish enough to make
Yeah.
a move of this magnitude on Canadian real estate. Like nobody would
So
just,
is this a little bit
yeah,
bullish?
well,
Crazy. We're
or
finishing the episode on a happy note here,
yeah,
okay?
yeah. I mean, like, I think that there's, and we see this all the time. Like, there's a lot of evidence that there are people who want to better and more exposure to Canadian real estate. Like, it shouldn't be a huge surprise to a lot of people. That's what we're seeing happening right now. So, I would say to me, it's just, is this your, like, we're talking about Blackstone here. Is for all the demonization they get, they probably get demonized because they're good at making money. They're exceptional capitalists. So is this a good smart money indicator?
I mean, I think so. If it's Blackstone, I would consider smart money. So, them betting on Canada, I think we're going to be okay. And let's leave it there, everybody. Thank you for joining us for our news episode today. Hope you got a ton of value out of this episode and all the episodes we do. We really appreciate everyone listening. I know we're not perfect. I know we make mistakes here and there, but we really do appreciate the support. Thank you so much for listening. By the way, September 15th, come out, Terminal Theater, downtown Toronto. Dan, we are ticket sales like crazy. Over 150 tickets sold already, and we're still like 6 weeks away from the event. So full sponsor lineup. We're going to be giving away awesome custom T-shirts. We got our own beer, okay? Dan, the multiplex draft.
I'm excited. We're gonna crack some cold ones. Draft, and it's draft, DRA draft. It's draft plan approved.
Yeah.
But the draft, like draft beer. It's a good pun.
DRAFT.
We're big pun guys. Punny.
On that note, thanks a lot. We'll see you soon.